Hey everybody, Raghee here. Yes, there is no camera. I was going to try a new camera today, but I did not test it out before going live. Oh, let's mute myself. There we go. All right, so I did not check the camera, and unfortunately, it just isn't working. So I'll see if I can't get this thing out of the way. There we go. That ought to do it. All right, so welcome, gang, to our Sunday Notes Live. Everybody should have received the notes in the membership, Options Room, Futures Room, Sector Secrets Mastery. And of course, this is where we start digging into some of the detail from those notes. And we're going to go over that here together. So hope everyone's been enjoying their weekend, taking a little time to unplug. And of course, this is where we are going to absolutely dive into what we're expecting in this coming week and whether or not we can expect more downside, right? I think that's the big question. So let's start off with the hot zones. Let's start off with the economic calendar. I get questions about this quite a bit. So really easy to understand what's going to move the market and why. And it really starts with scheduled events. And there's two calendars, really three, that I start with. One is the Forex factory calendar. And if you take a look, we don't have a lot. We've got core durable goods on Tuesday, not much at all on Monday. Now, you'll notice some of the red hot zones here. That's for Australia. So unless you're trading EWA or the Australian dollar, probably not going to be a huge mover. Things get a little bit more exciting come Thursday. And we have our advanced GDP release, unemployment claims. And that's really pretty much it until we get to core PCE on Friday. So not a lot by way of hot zones. We're really talking about Tuesday and Friday for data. Now, the thing that we always want to be sure of as well is what are the events in terms of the Fed speak? What kind of FOMC events can we anticipate? And I'll usually check tradingeconomics.com for that. And just kind of scrolling through, you see just really nothing by way of the FOMC members. So as active as they've been, doesn't mean that they can't have a soundbite here or there. But if you take a look, our hot zones are pretty much Tuesday with core durable goods or the durable goods release. And then Friday with the core PCE. Now that core PCE is really important. That's the Federal Reserve's pet inflation number. And if you notice, I went into a little bit of detail, actually a lot of detail in the notes about just some of the errors, and they're novice errors, we've all been there before, that traders make when it comes to understanding macroeconomics versus headlines. And I think a lot of traders really got a wake-up call when, they confused Ukraine as a macroeconomic narrative when in reality it really was just a headline, and that the inflation narrative was only exacerbated by the Ukraine. And I go into a lot of detail so that you all don't make what I saw so often to be just a very novice, or as we say, noob mistake. We've all been novices before. I don't want you all, getting caught up in just that type of, erroneous understanding of macroeconomics. So I went into a little bit of that in the notes as well. So we got a little instructional this week, pretty quiet in terms of data. And then I went into maybe a little bit of a different take on the weakness in the Nasdaq. And while we will see momentum traders really probably now get very, very bearish, the reality is, as I was explaining in the notes, we're actually getting down towards areas of support. The Nasdaq is not in a downtrend. And if it does not organize into a downtrend, right, unless the Nasdaq can organize into a downtrend, there is a possibility of an oversold bounce, right? The NQ is not in a downtrend, right? So the idea, though, is what? The idea is basically, as long as this is a neutral environment, keep in mind there's a possibility for a bounce the closer we get to 13,000. And it's in these little bounces and potentially lower highs and maybe only a 50% or 38.2% retracement of this last major move do we start to see that the bears are bringing the ceiling down. They're bringing resistance down, and that could change a lot of things up. All right, so we've got a lot of interesting things going on, and probably the most notable and definitely for me, the most impactful for me in my book, Friday was just the commodities weakness that we saw. Oil stocks, miners, commodities, uranium, the steel, XME, SLX, XLE, a lot of those more inflation commodities driven moves had a heck of a pullback, including some great trends for us like Brazil. This is a trend that's been active pretty much since the middle of, I'd say, end of January to beginning of February. And here we are now in the middle of April, and that trend is broken. Doesn't mean it's a downtrend, but that uptrend is broken. So these are some of the more significant things that happened last week. Not that we punched down to lower lows in the Nasdaq. Frankly, if you all were looking at some of the updates and discussions we were having going back to April 14, 10 days ago, you know that we were already looking at the S&P breaking down, because if you look at any of these indices as a table with three legs, when the legs, which are the sectors in this case, when we've got 2 out of 3 of those legs, really pretty wobbly, financials, technology, there's only so much healthcare can do. And healthcare took it on the chin as we saw sort of the get out of everything reaction on Friday. And remember, there's going to be some seller's remorse, right? There's absolutely going to be some seller's remorse. We did not see what would be a well-organized sell-off. In other words, certain corners of the market should benefit when risk assets, certain sectors are weak. We should see staples pretty resilient. We should see utilities pretty resilient, even healthcare or energy. And we just saw everything across the board just sort of get hit, which is unusual and very likely unsustainable. So XLE brings up the first question of today's show, and that is, what about COP? So I do like ConocoPhillips. I do like this trade. This is one that we have had on. But remember, when we have a trade that hits the first target, our first profit target, as COP has, we have to move to a break-even stop. And then what happens then? And again, everyone's break-even is going to be a little bit different because everyone's fill is not the exact same fill. And that's the way we look at the fills in the mastery. In other words, I'm not going to assume everyone got the same fill I did. In fact, a lot of traders get a far better fill than I do, because I might be in another room doing some day trading in the futures room, and all of a sudden one of my sector secret mastery alerts go off, right? So I might be a little slower to the punch than some of our members. So it always cracks me up. We always talk about, hey, what was your fill? So everyone gets a pretty good idea of where we are, get their bearings. But once we hit the first target, we've got to move that stop to break even. And so am I going to get back into ConocoPhillips? I am not, because take a look at the window to earnings. Michael, no, definitely not. Once we're inside the 2-week window, that's the cutoff. That's the cutoff. All right. After a fall, hey there, Mark. After a fall like XLV, do I look for rapid price recovery, or do I just sell it? Well, when you say just sell it, I'm not going to short this. There's no short setup. So when you say sell, are we going to get flat from a long position? And yes. Or will I wait for a new setup? What are the signs that I have? We don't have any of that on the horizon right now, Mark. And it may not be an XLV. right? So this is where, as I teach you all, the boats and tide come into play. So this is where we'll take a look at XLV, crack that thing open, and ask ourselves, hey, within the XLV, do we have any kind of clarity that looks better than the tide? Are there individual boats? And there are a number of individual boats that look fantastic. So the next setup is not very likely going to be XLV, but rather the next setup is very likely to be a name that is within that group, but at a boat level, at an individual stock level. So great question, and thanks for that. And by the way, when you look at your book, and I think a lot of traders say, well, Rob, what are you doing? Gang, I can't emphasize this enough. When I send out an alert, you know what price levels I want to buy a particular option. Could be a call, could be a put. All right, so you know exactly the price trigger that I'm going to get active at. But again, accounting for different stop losses, when you have hit your paper cut level, because your paper cut level is specific to your account size and specific to your fill. You know, this idea, well, what are you in, Rog? Are you still in it? That's, I know, kind of the crutch everybody reaches for. And that's exactly the crutch that's going to kill your trading career. You have to manage what you have, and you have to manage it within the account size, right? So I know a lot of folks say, well, if Roggee's hanging on to it or whomever, right, I'll hang on. That's the exact wrong way to do it. So you know what you paid, you know where your paper cut is, and my advice is to stick with that, because there's a reason that you did that in the first place. Yeah. All right. So I'm bringing up XLRE. Tim has a question about that. And XLRE itself has a really good structure, and you can see the individual names within it also have very bullish. I shouldn't say good and bad, because that's not really the way we should think about the market. It has quite bullish structure. So that's good for someone who wants to buy the dip, usually like myself. So now we know what it is we're dealing with. And the next thing we want to keep in mind is, well, if we are still in the middle of tail wags the dog season, which is earnings, then the question really becomes, if I'm past earnings in the most heavy weighted corners of, so let me talk to you about a few things earnings are not. It actually does not matter as much what EQR does for earnings. This is 2.8% of XLRE. It matters far more what Prologis or American Tower or Crown Castle or even Equinix, Public Storage. It matters more. Now, it matters a lot for PLD and AMT, because they're about 11.5% and 11% respectively in the weighting in this ETF. So this is a high concentration weighted ETF. These are things that I teach you all in the mastery. So I know a lot of you are already familiar with this. So if these major names are past earnings, and you'll notice AMT is not, but PLD is. CCI is, but EQIX is not, right? So a little bit of a mixed bag. The easier way to deal with this is to go to the tide level and say, well, if I have XLRE, maybe I have the ability to navigate this market without the direct impact of the earnings hot zone, right? The high impact, high volatility scheduled event. That's what I call a hot zone, right? So the issue really with XLRE is really a lack of liquidity. The only strike with and it's a ton of open interest, but the only strike with any real open interest takes us way out to August, and it's the 50 strike. So XLRE is not really going to be all that helpful. So then we go to PLD. That's the number one weighted stock within XLRE. And we look at the June expiry, we start taking a look at, say, the 160s. Now, these are very expensive and they're ridiculously illiquid. So one of the problems you're going to find, Tim, as you go through some of XLRE is liquidity issues and earnings. And liquidity is actually the bigger problem. So XLRE, sure. So anytime you're looking at a symbol, remember, what do you have by way of options liquidity? And a lot of times, my friend, that's where the wheels, like we're seeing right now, that's where the wheels fall off the wagon. Okay. All right. Moving on to FXA. And thanks for the question, Tim. FXA. Hey there, Alan. FXA pulled back quite a bit last week. It got crushed last week. Yeah, Aussie got crushed last week. And this goes really right along the kind of names that have been in excellent trends at this point for months that absolutely got crushed. So it didn't pull back. It just full on broke a wobbly uptrend. Let's also look at FXA for the trend that it is, or really isn't. This thing went neutral back on the 14th. This thing stopped being an uptrend back on the 14th. And if you take a look at the 6A, the futures, same thing. Between about the 14th and the 18th, the Australian dollar futures also lost their uptrend. So when you're starting to look at prioritizing currencies that you would want to buy against the dollar, right? I don't think Australian dollar really has been near that list since the 14th to 18th, while names like the 6E look far, far better, right? So even, look, I didn't know that nobody knew that commodities were just going to get crushed on Friday. Commodity related names were going to get crushed on Friday. And yet the structure, or sort of the disintegration of the uptrending structure, preceded that sell-off, right? And you take a look at 6E, it's holding steady, right on track. So always, please keep an eye on the structure, prioritize the structure. Gang, trend trade. So all of us out there have specialties, right? Your specialty might be different than your friends. Your friends might be different than other people that you trade with in this community that you're in. We all have specialties. What is the edge that I think I bring to the market? And then, hopefully do a hopefully good job sharing with you all. What is it that I know I do better than just about anybody I know, right? That's your edge. Right? When I look at my edge, I'm not great at everything, but I know I do certain things better than anybody I know. One is the way that I look at sectors, right? And two is the way in which we build a watch list. So you notice that FXA goes right to the heart of outperformance, relative outperformance. FXE as a relationship back to the dollar is better. Heck, even UUP. Alan, if you're open to commodity ETFs, and I love that you brought up a currency, keep an eye on UUP as well. So a CAT, sure. Starting with the structure of CAT, so this is where I'll say, if you, for those of you that have, and this is a really easy answer for everybody. If you've read my 642, actually, Trish wrote this up probably well over a year ago. It's over at the Countdown Trader. If you're familiar with my 642, right? Anytime you ask me about a symbol that is inside 2 weeks to earnings, believe me, I'm going to tell you the same thing every time. I can't get in it. I can't go for that. No can do. In the wise words of the philosopher Hall & Oates, right? I can't go for that. And I won't. As a directional debit trader, I realize that for me, I'm at a disadvantage. I don't have as great an edge as an options writer, which I don't like to do. As an options buyer, I'm losing my edge as implied volatility goes up. And I don't play earnings. So there's a belief that if we've got a pretty good idea of what prior earnings have done, we've got a pretty good idea what it's going to do in the future. And that could not be further from the truth. That's probably a pretty common error that traders make, that if I know the last 4 quarters have performed this way, this quarter now should perform something like that. That's actually untrue. Why that sometimes looks to be true is the way in which the whisper numbers were positioning traders in front of the earnings. Earnings is a whisper number game, gang. That's it. Earnings is a whisper number game. Now, if you can overlay a trend and an understanding of the whisper number, then you can play the rally into the release date and you get flat before the volatility of the earnings release. Or you can play the tumble into the release date and you get flat before the release. So all of my earnings are about, gang, I'm not going to make some scratch off lottery ticket delusion about that I'm going to be right about which way earnings are going to go. Think about what that is. Think of what you're trying to, the sort of eye of the needle you're trying to thread. What the volatility is going to be, what the direction is going to be on probably the most volatile event a stock goes through 4 times a year. So I need to get direction right. And if I'm not playing directional, I've got to get the range right. And so what happens is this disproportionate memory, right? That when you are right, it feels amazing. But you're going to find from a probabilistic standpoint, getting it right is very low probability. So be very careful, gang. And I just put this out there just to remind everybody, if I thought I had an edge into earnings consistently, that's the key word, gang, I would play it. But if you look back on whatever earning strategies that you're doing inside 2 weeks, and if you hold through earnings, be realistic. Now, if you're doing really well through earnings, then ignore everything I said. You're likely factoring in earnings and the whisper numbers in a way that's working. So carry on, for sure. I think most of you, the vast majority, are going to say, yeah, Rog, earnings are hit or miss at best. And when I do get those hits, it feels so great. I just want to go find that again. So what I'll tell you is play the run up, play that rally, or play that tumble into that date. Check out the 642 window that I've shown you, and you'll really find that that's the way you want to focus on earnings. At least that's, and by the way, that's a tactic that can supplement whatever else you might be doing. It doesn't have to supplant anything. It'll supplement any earnings approach. And I bring that up, Axel, with your question because CAT is inside that window. So remember, what CAT has done at previous earnings is almost irrelevant. Where are the whisper numbers and how have those been trending in front of the actual release? That's going to tell you the reaction. How many, and you all know probably anecdotally this is true, because how many times have you seen a revenue beat or an earnings beat and the stock sells off? And then of course we have the complete wild card of the conference call. And we think we're going to somehow do that. I just find it to be really a tricky play. So I say, hey, play the higher probability play, which is before, into, right? And then after earnings, there's the aftermath setup, which I think is far better, right? So play into earnings and then play after earnings. And those two windows are going to probably serve you far, far better. All right. I mentioned how sectors are represented in the different indices. Where can I find a breakdown? There are at a number of sites. I like to use ETFDB. All right. Next up, how much of a pullback in NG would we need to see to get involved? Great question. So again, a lot of commodities got absolutely, really just punched on Friday. And as the philosopher Mike Tyson says, everyone's got a plan until they get punched in the mouth. Now we're going to see whether or not the buyers, the bulls, still have the desire to buy pullbacks. And I'll tell you, NG, Sean, the setup that I have been focusing on for my traders in the mastery is straight up the 21, wait for the pullback. And chances are we're going to get active tomorrow with this thing. We're very likely going to see a setup for us for UNG. For UNG. So I'd keep an eye on that one. And then if UNG is in play, I put this in last week's notes. Gang, I don't lay my notes out where we take a look at every single sector. We take a look at a list of a gazillion, stocks. That's not helpful. If I give you a list of 60 names and that's not helpful, right? If I take a look at all the sectors, again, that's not helpful. We want to be very specific about where our attention needs to be. We've been waiting for a pullback in this thing because I mentioned FCG in the notes from the week before. So we always want to be looking ahead, getting ready. So if natty gas pull back and FCG is pulling back, this is looking really good for some of the natty gas stocks within FCG. So I'm giving you a little taste of what we do in the mastery so that you get an idea of, oh, okay, so we've been looking at this for weeks. Yep. And then now we'll determine how, if at all, we can either go at the commodity level or the individual sector or an individual stock, a boat within the sector. So again, if you're going through the notes, the idea is never, let me just go through this rote list of names and just break down every single one of them. That doesn't mean, look, there's not a likelihood that every single sector has a setup or that every single sector is equal in terms of its quality. That's where, when we're going to break down and I'm going to give you some sort of breakdown of the market in the notes that I put out daily or the report that I put out weekly, I'm really going to point you in certain directions, right? Specifically. So you know what's a priority to me rather than, hey, here's 20 sectors that we're going to break down. That's useless, right? Or here's a list of 40 names. Again, that's not going to help you. When you're building your own watch list, please do the same thing. Require that level of focus and specificity. That focus and specificity is going to serve you so well. So I hope you see that. That's what I try to put out in those classes. In the classes, in the notes. Sorry, I was just reading Trader Mo. Yes, you took the Forex Freedom class. Awesome. Auto Chartist, yes. Auto Chartist and Awanda, yeah, that they've changed a lot. Auto Chartist, you'll go through Chart Viper for the subscription. I do have a special rate for members. It's not an affiliate. We don't get any kind of anything. I've just negotiated with my buddies at Auto Chartist the lowest rate I could for you all. Awanda does not offer the heat map any longer. You can use the heat map over at Finviz, FINVIZ.com. Right. And then daily price movement ranges have always been available through Auto Chartist. You just have to either go through the brokerage, which I do not, Trader Momo. I just pay the $145 a year to Auto Chartist. And that's if you want that data. That's what I focus on. And I think for Forex, historical price movement ranges are very important. In fact, most of my trading in Forex has gone purely to that historical volatility approach. And if that historical volatility approach is something that's interesting to you, at the very bottom of this week's newsletter, I put an example of the edges, the HPMR support and resistance that I plot on my chart. Some of you have probably seen this before. And this is a process I created years ago. And we're definitely going to continue to talk about volatility, how I measure volatility in a way that reflects the fact that every symbol has a personality. And when you have enough data, you can actually start to decode that personality hour by hour and even day by day. So it's pretty cool. It's pretty cool. All right, next up, we covered natural gas already. So the question on corn there, got a question about corn. Yeah, a little bit further down into the wave, Mahai, I am absolutely fine, keen even on corn, and then also things like DBA and ADM. Yeah, so that's still absolutely on the radar. AZN, too close to earnings, gang. So again, when you pull up a symbol and you look at it, here's an easy way. Pull up the symbol, drop a vertical line on it and say, okay, let me subtract 14 days. And if it's inside those two lines, there might be other folks who do things with that, but I won't. Now, if you do want to do something with this, look, it is a buy, right? It is a buy, but I will not hold through earnings. The rare exception that I make is when I am sitting on a already scaled out position. And then, so that means that I'm at least at half, if not quarter of the position size. It's already a winner, and I'm willing to risk a little bit of unrealized profit on a much smaller position. So those are sort of the limitations that I place on the way that I'll deal with earnings. All right. So next up is, all right, gang. So again, as far as the economic calendar this week, really pretty quiet. Tuesday and Friday is it. But remember, it doesn't mean that we may not hear geopolitical chatter, and we won't hear from Fed members, but we are definitely looking at probably from a scheduled economic event perspective, a pretty quiet week. All right, so let's see. Let me grab a few more questions here, and we'll wrap up the show. Check out the notes, and let's see. Earnings. Well, that's another calendar. You bring up a good point, Imanu. Let me show you something here. This is the calendar that I use for earnings. I've used this service for a lot of years. This is what I use if and when I'm going to trade earnings. So when you look at what we have coming up, oh yeah, we're coming up into the high Richter, scale moving. This is the earthquake stuff, gang, that we have coming up. Microsoft, Google, a lot of the big names for earnings coming up. And Facebook, yeah, we have a lot of big names coming up. And so we don't need hot zones by way of data releases. We've got plenty by way of earnings. So in terms of on the impact on NQ and ES, so I'm never going to guess which way the markets are going to go. We don't know, right? That's why I don't play earnings, because let's face it, let's be honest. I don't know what they're going to do, and neither does anybody else. So what we want to do is, since we're inside the 2-week window, I mean, we're inside days, right? We want to wait to see what the aftermath setups may be. After earnings, after the call, are we seeing price level at some sort of support, resistance, volume ledge, retracement, something that we can say, hey, now we've got a setup. Now we've got something we can work with. All right. So great question. I'm just so impressed with the questions, gang. I mean, really good stuff. Really good stuff. All right. So final question here is, what do I think about GDX? We have a small position that we have begun in GDX. Yeah, a small position that we have begun in GDX. So I'm bullish still. I'd like to see how it settles if we're going to do anything more, but we're beginning a position in GDX. So that is right now already something that we sent out last week in the morning in the Sector Secrets Mastery. We did that back on Friday, the 22nd. All right, so gang, that is it for the show. Thank you as always. I'll get this camera situation fixed before charts and coffee. But honestly, who needs to see me? Isn't it better having the big old charts? But anyways, I'll go sort out this camera situation. I had this cool camera that I thought was going to work, but I'm super, super disappointed in the camera. So I'm going to bring the good old fashioned one back. All right, gang. Have a great one. I will see you all tomorrow morning for charts and coffee. Enjoy the rest of your evening. Love getting the jump start on the week with you all. Be good to each other. Check out the notes. And I'll see you tomorrow at 9 a.m. right here at the Simpler Trading YouTube channel. If this is helping you out, smash that like button. If you have a question, you're catching this on replay, feel free to leave it in the comment section. I do check them daily. Most of the time, you'll notice I answer those questions on the YouTube channel myself, right? Either Trish or I are answering those. We do check back quite a bit. So, all right, gang. Until then, enjoy the rest of your day.